Hello everyone, welcome to the Ichimoku Charts.com daily analysis for gold for Thursday, October the 22nd. Well, quite obviously the market is in a consolidation phase at the moment, and I've marked on the charts a chart pattern which is bounded by these lines above and below the pattern, and that pattern is what's known as a symmetrical triangle. We can see that we have the two converging lines between the swing highs and swing lows within the pattern, and these patterns tend to be continuation patterns. It's not always the case, but they do tend to be continuation patterns, so the probability with a normal symmetrical triangle will be that the market will break out to the upside. Having said that, though, we do need to be alert for a breakout to the downside from this pattern. And when I talk about breakout, I'm talking about a breakout from the lines that draw the boundaries of the pattern. Obviously, if we have a breakout to the upside, we've identified this previous area of resistance here, and we have seen previously that we had this downside price rejection from above this resistance area at around 1066, 1067, and the market will need to close substantially bullishly above that area. If we have a solid bullish close, then we should expect the price action to continue on its way, and it should trade up to at least the next resistance area that we identified up above the 1080 level. These consolidation patterns, symmetrical triangles, don't always break out to the upside. There can be a breakout to the downside, so we need to be aware of that and ready for a breakout to the downside. If there is a breakout to the downside, we have the Kijun-sen here as a potential area of support, and that's at 1028. So there is potential for that, and that coincides with roughly with this previous swing high, major swing high at around 1025. So there is potential for this previous resistance here to turn into support as well. As with all patterns, the first requirement that we have is that we do have a previous trend, and we do have a solid uptrending action here leading into the pattern. So that requirement is filled as well. A lot of people don't realize that. A lot of people they think that it's great that they see patterns and they draw the boundaries of a pattern, but quite often there's no decent trend leading into those patterns, and they need to be aware that that is the first requirement that we have for any pattern to be a pattern. You need a previous trend, and that's because we know that markets move from trending moves to consolidation or retracements and then back into trending moves. So for this consolidation to be valid and to reverse any trend, we need the trend, obviously. So we have that in this case. Just looking at the current candle. The current candle is in candlestick terms an indecisive candle because we have a very small body to the candle. It's red, which means that on the day the sellers have made net bearish gain, and that's telling us that the bears have taken some sort of, they're in the ascendancy here in a very short time frame. But overall, though, with there being very little difference between the open and the close, it's really inconsequential. It's so small, and it's almost a doji type candle, which reflects indecision. It means that the amount of gain that any side made was very little, and we like to see directional moves if the market's going to trend in a direction. Some may be tempted to call this a harami pattern, but it's not. We only have a one candle downtrend, and we need something more substantial for a candlestick reversal pattern. And this has occurred within this consolidation range, so there's no harami pattern. So if anyone tries to tell you that that is a potential harami pattern, then it's not quite correct. So indecision, the market is finding support and is trading around the Tenkan-sen, which is the green line, a little bit hard to see, but it's trading around that area, and it's flat, and that's reflecting the consolidation that the market's in at the moment. There's basically no decent direction in any time frame to this market. Also, the Kijun-sen here is flat, and that reflects this congestion as well. Now, because this Kijun-sen is flat, there is a chance that the market can break out to the downside and retrace back towards this Kijun-sen, so we need to be aware of that is a possibility. Looking at the cloud here, we are trading up above a cloud or the Kumo, and that means that the market has a positive bias. And we are trading up above the Kijun-sen, which means that in the medium-term time frame on the daily chart, we do have a positive bias to the market. The market is bullish in that time frame, and the market is just trading up above the Tenkan-sen, which means that it's positive as well. But overall, we are within this consolidation area. So considering that the Ichimoku charts are giving us a lot of positive signals, even though it's pointing sideways, the probability will be that the market will break out to the upside. So if the market does break out to the upside, then we need to place a sell stop just the other side of the boundary of the symmetrical triangle from where the market broke out to the upside. Be aware, though, that we do have that overhead resistance above that the market needs to trade up above.